Good morning, Stock Twits crew. Hope everybody's having a great Thursday morning so far. We are getting things going. Had some data come out this morning that we're gonna go over, but market's still fairly quiet in the morning. I mean, to be honest, on the higher time frames, we've really just been chopping back and forth on this 4 hour. So I'm waiting for a bigger move to come. Hopefully we get that today and into tomorrow for Friday. But I'm getting excited for the morning. Shy, how we feeling?
Feeling interesting. We had
Yeah, we
some
had some earnings
volatility
come out,
yesterday.
huh?
Yeah, this is perfect example what I've been preaching for weeks. Have that dry powder on the sidelines to capitalize on high conviction plays. Having an overreaction on an earnings headline that isn't thesis breaking, and that's what we saw yesterday. A lot of like the stuff that occurred. I didn't add a Palantir, but like there's a couple other names. I had three names down 10% plus yesterday, and they were high conviction names. Nothing about it was thesis breaking. So I added some of them, added some of my 12% cash position into those names, and I did it smiling because I was like anticipating a buying opportunity like this. I didn't want to I catch FOMO, etc. So like yesterday, that Pentagon budget cut, it provided an opportunity again to multiple new age defense names. And I took advantage of that. So I'm happy. We're seeing some volatility back in the markets. I love to see it because it is boring when it's just up to the right. Like you want some choppiness and you want some opportunity.
Yeah, I'm with you. Let's get into the daily rip. Let's recap what we had yesterday. We got a bunch of data and earnings going on, so we'll recap with that. Let's see what we got. My boys in the back. We got the daily rip on. It might be glitching. You're good. No worries. You're chilling. You're chilling. No, you're good. Yeah, just looking at the market right now, I'm feeling pretty bullish going into the pre-market just to give my thoughts. I mean, we talked about that consolidation. We've been accumulating on that 4 hour, but it's off of a bullish trend for Nasdaq. I'm looking at specifically, so I want to see higher as of now, but obviously things can change, right? If we get a push below that really 22,130 for me, it's going to be tough, and I think my bias is going to switch a bit. But for now, I have to be bullish and positive with the market. But Shy, we had that Unity come in a bit. Oh, here's the heat
Bro,
map.
Unity's green, but 2% now. That
I
was a
know. I was
10%
gonna say the
swing.
bounce back is beautiful, and when it did come in, it really did not drop much at all. So we're gonna talk about that in a little bit. Now that we got the daily rip up, we're gonna go through this. But here's the heat map from yesterday. Um, as Michael Mouse calls it, a little bit of a Christmas tree. So definitely some mixed red and green in there, but it looks like more green than red to me. So big tech, kind of mixed. You got Meta down, you got Google barely green, Apple barely green, Amazon. Tesla had a decent day. Tesla's actually been looking pretty solid lately, and even in pre-market here, it's not looking bad at all. I'm seeing everything I want, so really liking Tesla at the moment. But Shy, anything really stand out to you?
Um, I mean, it was a dead day. Nvidia finished red as well. Not, I mean, I think Meta's move's kind of crazy. The profit taking that occurred like 20 consecutive days, and all of a sudden it's down 5% in two. Like, I think it was definitely overextended, but it's interesting seeing that. But yeah, I mean, yesterday was a nothing burger. I really think I said it Tuesday morning pre-market. I don't think anything's going to happen this week.
Yeah. I didn't
Nothing
even
is
take
going to
any
happen.
trades on the futures.
Yeah.
I mean, there were plenty of people on the Spaces panel yesterday that were scalping back and forth, you know what I mean? But I just really didn't see
No,
much opportunity for like real follow through, and I sat out all day. I was waiting, but nothing really came that I liked. So
it's everyone's just waiting for Nvidia next week. That's what's going to
exactly.
happen. Like nothing's going to occur on Monday next week or Tuesday. Maybe some weird power hour move Friday on repositioning for next week. But even then, like take the week off, do some research, read some earnings reports, listen to the earnings calls on stock twits. Like this is the time to do your research and gain that conviction you need when volatility and liquidity comes back to the market. You can take advantage of it.
Yeah, I'm with you. I'm with you. Let's see what else we got. A little prick goes a long way. Hims big gains. Oh my gosh! If you guys have seen Hims over the past wild. It's been ridiculous. Shy hates it.
I mean, I'm wrong on this name apparently. So
I,
that's the
I,
thing.
me too. Me too. My whole chat every day in the stream just bags on me for it. But yeah, hims and hers just went full throttle on your personal well-being by snatching up an at-home lab testing facility. They want to keep you at peak performance so you can flex your health stats with confidence. A quick prick of the finger, and you'll know if your hormone levels are standing at attention or losing steam. It's all about delivering the goods on everything from cholesterol and liver function to testosterone, thyroid, and cardiac risk. While some investors are immediate believers, skeptics are quick to point out that what is being described sounds a lot like what the infamous Elizabeth Holmes of Theranos tried selling not too long ago. Hims considers this acquisition a hard push toward a future where your health data works for you. No half measures, no limp strategies, just straightforward access to personalized care so you can stay in control. And I mean, the chart is reflecting it. I mean, look at the chart over the past week, 2 weeks. This has been a killer, man. So, I mean, don't want to fade this strength. That's for sure. Just looking at the chart, this momentum is ridiculous. I don't see anything bearish about the chart itself. But at the same time, I'm not extremely. I'm not a huge believer, I guess, for the longer term future, I guess. But my mind can be changed. It's just we'll see if it actually does. Shy, what are your thoughts on this?
So I think this was again putting my corporate strategy hat on. Great acquisition. Like it's at home lab testing really isn't about just accessibility. It's about data dominance and in healthcare specifically, if a company that controls the most data and more importantly knows how to use it will win. So with this acquisition, like Hims does somewhat move beyond system based treatment into like biomarker driven precision medicine, which is the golden goose a bit in the space. So the ability like really to track like what you said, the hormone levels, cholesterol, stress markers, it means a more nuanced and proactive approach for care. Like that's good. It's a win-win.
Yeah,
But
it's a good thing for
the
sure.
my thesis on Hims like isn't doesn't change long term. Like I do believe the competitive landscape is going to be rewritten in the space. It's not happening yet. Amazon just entered the telehealth space. Google is also dipping their toes in, and Hims is dominating right now. I'm not gonna lie, like they are absolutely dominating. But in your DCF models, I think right now they're trading at 50 times free cash flow. I I don't know in 3 to 5 years if you can price in 80% gross margins anymore. I that's really difficult for me to believe that when you have bigger fish in space. Um, Amazon can afford to operate telehealth at razor thin margins, like maybe even at a loss, leveraging their logistic empire to offer same day medication in a lot of the areas. While Hims, just like every other independent player, um, they're going to have to fight for sustainable unit economics, and it's going to come at the expense of their margins. So I think I'm not saying Hims will go obsolete. I just the market is giving them a premium valuation right now, and it's going also going through a short squeeze. But it's they're 50 times free cash flow for a telehealth play. That's a premium. I don't think they're going to have a premium valuation in a couple years, and I think their margins are going to compress, and who knows what that's going to turn into. I just, I think kudos if you're a shareholder. I was clearly too early or wrong. That's right now. I missed out on this opportunity, and that's okay. I'm not gonna hit 100%. If I hit 40%, I'm an elite MLB All Star. I use that same time mentality in investing. So the winners usually, if they're real winners like the Palantirs, the Rocket Labs, Ion Qs, they'll outweigh the missed opportunities like it Hims in her health.
100%. So Hims ended up closing with a 17% gain and another new all-time high. It's up 180% since the beginning of the year. But what happens after today's big move? Here's what the StockTwits user said. So 61% of the users said we continue higher towards $100, so or $100 plus. So StockTwits community looking really bullish still. 15% said they need to reset and trade sideways. I'm kind of I feel like I would be more in that camp a bit, trading sideways. And then 24% of people think steep pullback. So interesting stuff there. We'll keep an
This
on the
Unity
stock
moves
that's sending
wild,
it.
dude. It's
I
up
know. Look at it.
9% now. Gee, I hate
Oh,
I hate
hello.
pre-earning pre-earning pre-market earnings because I don't get a chance to listen to a conference call. Like
Yeah.
something got said on here that caused the 20% move.
Yeah, wild. Carvana crushes earnings as well. They posted record-breaking Q4 and full year 2024 results, raking in $13.67 billion in revenue, $404 million in net income, and a jaw-dropping $1.38 billion in adjusted EBITDA. Retail unit sales jumped 50% year over year in Q4 and 33% for the full year, making them the most profitable public auto retailer in U.S. history by adjusted EBITDA margin. You'd think investors would be thrilled, but the stock is getting obliterated in after-hours trading, down 12%. That's wild. Shay, you got any thoughts on what happened with Carvana, with like especially such a solid report, and then investors just hating it?
I mean, it isn't classic example of look to the left, guys. Like you kind of have to see how much it ran up into this print. Um,
It did go straight up. If you look at from January 3rd, the lows, I mean, it's basically straight up since then.
yeah, so it's just profit taking to be honest. Like I wouldn't look into it too much. They the craziest statistic I remember on that call was they have only a 1% market share today. So like their runway is huge. It's just I don't know. I just don't believe their numbers. So I just really don't. It's like crazy to me. I think you again, I didn't dig into their balance sheet as much as I should because I have no interest in owning a business like that in my growth portfolio. But there's some wonkiness. There's some financial engineering that is regulated that you can do to mislead a lot of the retail audiences. Like you see it all the time. Hims and Her Health does it actually. Like if you look at their operating margins, it's drastically different than what they're actually producing in the free cash flow and net income because they book certain expenses in different buckets that shouldn't really be in that bucket, but it's regulatory approved and it makes their business case look better. That's what I'm talking about financial engineering. Like Carvana does that. Like I don't know how their EBITDA margins are 10% and they're growing their top line 46%. Like that's just like what the F? Like how's that possible? What's occurring that isn't making like all these other companies mimicking your business when it's clearly thriving and like you're growing 40% while expanding your margins like in something like it's just reselling used cars at the end of the day. That's all it is. So like something is weird about this, but maybe it's just not my lane. That could absolutely be the case.
Yeah, I'm with you. I don't think it's my lane either, man. I made some good money on Carvana, and then I lost some good money on Carvana, and I've been wrong since. So that's a name I stay away from at the moment. SEDG, its bet Solar Edge shines. It's deep in the comeback arc, cutting losses from last quarter's $1 billion write-down while clawing back to positive free cash flow. Revenue still dropped 17% quarter over quarter. Margins remain brutally negative, and guidance suggests a slow crawl out of the hole in 2025. Here's our earnings recap. They reported Q4 2024 EPS of $3.52, significantly worse than the estimated $1.50, or minus $1.50, right? So minus $3.52. In revenue of $196.2 million, exceeding the estimated $189.25 million. However, the company expects to generate positive free cash flow in Q1 2025 and anticipates that most European channel inventory will normalize by the end of Q2 2025. The company is on track to generate positive free cash flow in Q1 and expects to remain free cash flow positive for the year, but the European markets are making it challenging. So, any thoughts on this, Shy?
I wouldn't be in residential solar. This is like not the place to be. If you're going to be in solar in a Trump-led presidency, it's got to be one that's more industrial that has
Wider
large
scale.
contracts and like out years, like reduce that residential risk. It's First Solar.
Yeah.
First Solar, to be honest, is the only solar play that I would even be interested in because of their large contracts, their industrial exposure. Like these businesses aren't going away from First Solar just because Trump's going to be president for 4 years. Like they're not going to. It's just not going to get that much tax credit, and that's going to affect their next couple years. But like the thesis won't be broken. So Solar Edge, like I don't know, like this, and Enphase Energy, like I think their residential exposure is just way too risky, and I'm just like not worth the headache. It's just not.
Yeah, I get you. I get you. Well, today's top things, we had economic data come out this morning, jobless claims. Those came out at 219K. The forecast was 215K, so slightly higher there, but to be honest, like not a massive change. So I don't think it's going to be affecting the market too much there. We have Fed Goolsby. I think he's speaking right now. Bless you, Shy. He'll be speaking here into the market open. EIA natural gas is happening at 10:30 Eastern. We got crude oil inventories at 12. Fed Musalam speech at 12:05. Fed Barr speaking at 2:30. Fed Kugler speaking at 5. So plenty of Fed speakers throughout the whole week we have. So keep an eye on those times. You might see some volatility in the market. The pre-market earnings, we did talk about some of them, but we got Alibaba, Jumia, Walmart, Bilibili. I'm just gonna say CVE because I can't even say that word. Hasbro, Talkspace, and Unity Software, which we talked about a bit. And then after hours today, we got Dynavax, Mercado Libre. That's always the one that I'm interested in looking at. Mercado Libre, Dropbox, Booking, Celsius, Block, and Indie Semiconductor. Obviously, Celsius is gonna be pretty interesting, especially after seeing the day yesterday. It was a pretty killer day on Celsius, but you know, seeing a big bounce is great and everything, but one day does not make a trend for me. So, love to see the day, love to see the momentum that we had, but let's get a good earnings report on Celsius and get some real momentum going before I put my real big bull hat on. But reminder, you guys can listen to all these calls on the StockTwits platform, so take advantage of that. But Shy, any of these companies that you're taking interest in into the close?
I I just added Celsius, only 100 shares, but as we spoke right now, just because it's at the 9 week EMA level, it's gone rejected every single time at that level since May of last year, and that's when the bubble bursted essentially. I I've never seen, I shouldn't say never, but like I can't remember the last time I saw managements call out their earnings are going to be in 2 days out of nowhere. It, something is up. And follow up with the management presenting on Friday. I just think there's something going to be that's going to be announced that's going to be a tailwind, like that they're so eager to kind of release it. And the reason I think it's not on the negative, preliminary earning releases happen all the time if something bad's going to be announced. You have to. It's corporate governance. So if there was something negative that's going to be announced, and that's why they accelerate the timeline of the earnings, they would just announce a preliminary earnings. That's what they would do. They didn't do that. They want to speak on it. They want to actually have the show, which is the earnings this afternoon. I think it's going to side on the positive, and like I'm telling you, like, there's so much negativity priced in the stock. It won't take much for this name to run. It just won't. And by run, I mean just go to $35. Like that's all I'm saying. Where they go retest their where is it? Geez, their 200 moving average is at $40. I mean, I don't know if it's gonna hit that, but like there's a major gap right now between $40 and 30 $30. Like once it clears $30, it feels like it's gonna be a magnet towards that $40 level, which is the 200-day moving average. Fair values in the mid 30s, but like that's based on the current fundamentals. Like if there's any reacceleration, any Pepsi equity announcement, or any international tailwind that's going to be helped by Pepsi's distribution, this is an opportunity. It's bled hard. So I might even look. I don't want to get into calls because I hate earnings calls. But I just bought 100 shares. It's $2,500. If I'm right, it'll probably be a simple $500, and that was add to my cash position. If I'm wrong, I lose $500. It's like I don't even know if I'm gonna lose $500. Like it's so negative right now. Like I just don't know what they're gonna announce is gonna be to the downside. So I took some Celsius. And yeah, we talked PLTR. Jeez.
Yeah. Looking a little rough now, huh? Let me just take a look at this on my charts as well. But I mean, coming in pretty good there. Not absolutely horrible. I mean, we got this gap below us from what is this, 99.30 to to that 84. So I mean, if we do get close to that 93 bucks, that $99, I'm definitely gonna anticipate we go and fill that gap, or at least 50% retracement of it, which would be sitting around 92.50 or so. So I would definitely look for that if that comes into play on Palantir. But obviously, I'm not this big bad bear on Palantir, and really, it's not dropping that hard. It's just from the highs. If you're buying highs, you're not loving it right now at 108 here. But I don't think it's dropped too bad at all. We're still holding structure for the most part. It's just, yesterday was kind of nasty. So see if we get any recovery, if that was just kind of, a blip and then we're right back to normal, or is this, a little bit of fear coming in? Maybe we go fill that gap, find some buyers at the gap fill, and then maybe go higher. But I don't know. What are your thoughts, Shy?
I think I got into this pretty pretty in depth with my subscribers of the yesterday because like I think this was one of the biggest misconceptions of that actual header news line because the Pentagon cutting 8% of their budget isn't over the next 5 years isn't death blow to Palantir's government business. It really isn't. Like I do believe that the future of defense isn't going to be what it used to be. Like you're not going to be seeing the dollars being flowed to fighter jets or missiles. Like it's going to be the new age of defense, AI driven warfare, cyber defense, autonomous decision making. That's Palantir. So I think the 8% budget cut, like it's going to target those legacy defense plays, fighter jets, missiles, and I do believe there's going to be somewhat of a reallocation towards the new age of defense. And names like Axon Technology do well, Palantir do great. I think that's what's going to happen, and that's part A. Part B is government efficiency. Clearly, I don't think anyone anticipated in Trump telling Pentagon to cut their budget, defense budget. Like, no, like usually the Republicans are very pro defense spend. So I think this is a highlight of government efficiency even more. What is Palantir's bread and butter? Efficiency. Their operating system creates efficiency at scale. That's what the government's doing right now. So I do believe like this, the market was just looking for a reason to sell Palantir. They got one. That was the headline they needed. I don't think it's thesis breaking at all. I don't think it's going to create some kind of revenue deceleration. If anything, it's going to emphasize the point of why you need Palantir. And I wouldn't say it's a buying opportunity because I might be tilted because I got in under $10 overweight. I'm not going to add a name that's 10x. That's already, even after this dip, it's a 12% position for me. It's my number one position. Like I don't have the urgency to add. But if I don't have exposure into this name, there is an interesting gap that's going to be filled if this FUD continues. And maybe it does because technically it's broken down. And look out for that because if you want that AI exposure, AI bucket in your portfolio, and you don't own a Palantir, it's similar to wanting cloud exposure 10 years ago and you don't buy Microsoft, Google, and Amazon. Like that's how ridiculous like it is. You would look in like 10 years. So that's why I'm like, you gotta be patient with Palantir, but like you buy those aggressive dips. Like maybe not here, but if it hits $80 and you have no Palantir exposure, I don't know. Like maybe, but it's a tricky thing.
No, absolutely. Let's see what else we got. SMH, Semiconductor, stuck in a range, which you've pretty much seen on every semiconductor name. Yeah, I mean, you just take a look at Nvidia, right? It's been pretty sideways for the most part. Of course, it's had some good days, but we've really just been in this range for, gosh, how long now? I mean, this range started back in October of last year here. So we've been in this range for a decent while now, and everybody's just waiting for earnings, right? That's really what everybody's waiting for. I don't think you're going to see much on any of the big semiconductors, especially the ETF here, until Nvidia earnings gets released. So I would anticipate continued chop until then. But maybe we get some actual directional moves made after those earnings. Who knows? All I know is Nvidia was a massive leader last year. It's not really been a massive leader this year, even though, of course, yes, when Nvidia is getting a massive pop, market is likely to follow still. But also, the market doesn't need Nvidia. I feel like at least right now to do anything. You know what I mean? Especially when you've seen Nvidia just do what it's doing here in this range. So, I don't know, Shy. What are your thoughts on semiconductors right now? I know we're all just waiting for earnings on Nvidia, but this SMH is even choppier than Nvidia is. So I'm curious on your thoughts.
Yeah, so I don't know. I think Nvidia's going to be fine, guys. Like for sure, I think it's going to be just fine. I think maybe a transition of shareholders is what's occurring right now in Nvidia, where the easy money has been made. Obviously, they're cemented themselves as the kingpin of the new digital economy via their CUDA platform and their NVDL link. But everyone's worried about the cyclicality risk of owning Nvidia, where even though the software component of their ecosystems gain momentum, they're going to be losing their GPU pricing power. It's inevitable. Nobody knows how aggressively or how much, but it's inevitable. And you're seeing signs of it via DeepSeek playbook reveal. You're seeing somewhat of a peak on CapEx spend, incremental growth from all the big tech players. AI workloads from all the cloud service providers are on the lighter side, which indicates if it doesn't pick up, there's going to be those ROI conversations in the boardroom that's going to affect AI related to cap investments. So like that's where this tricky. And you have to ask yourself like it's worth $4 trillion or three. I don't even know what it is anymore. Where's the next move? Like that's what it is. Like stage one of AI is occurring. The biggest move already occurred. It's probably gonna have another leg sometime, but it's an S curve. I think we're in the middle of that S curve for stage one. So who knows how long the middle of that S curve is going to be? But guess what? Stage two of AI is also an S curve, and we're at the bottom. Like it's just getting started. So I think that's why you're seeing a repositioning on the SMH ETF towards the IGV ETF, which is software, and you're seeing the outperformance the past 6 months. Like that repositioning is occurring right now. So I don't think it's a bad play. I own a trade in Nvidia. I think it's just one of those things where they're so essential, and you're seeing like even XAI commit to spending billions of dollars on computes necessary for them to fulfill their vision. Like Nvidia is going to be printing cash as long as it holds above their 200-day moving average, which that was a buying opportunity clearly. I'm gonna probably park a decent amount of my cash into that name because the opportunity is so high still, and who knows what how long the party's gonna run. But as a long-term investment, like I don't know, there's probably better alpha out there, but also it's somewhat of a safe stock, and they're going to be just a key component on so many different secular growth themes. Like you can simulate um, quantum algorithms in their virtual environments on their GPUs before deploying the physical GPUs, aka quantum computing exposure. You can do the same thing on physical AI. Like they're gonna be in this the invisible web behind physical AI as well. Like there's just so much that Nvidia is going to be in, but opportunity cost. That's what people are like fumbling, and they just I don't think they're gonna have a trade desk like a report, but like what like they've just dominated every single quarter. Like there might be that one quarter where it's not just noisy. There's gonna be fuel on the FUD fire, and who knows when that's gonna occur. And maybe it's this right now because you have the DeepSeek playbook reveal, Blackwell ramp up, hyperscalers creating their own custom silicon chip that's becoming just as efficient as the NVIDIA GPUs. Like there's just a lot of FUD and noise, and who knows what they're gonna report.
Yeah, I'm with you. AMD Bulls versus Bears at 200 EMA. The
Ooh,
advanced money
Palantir is
destroyer.
down 8% right now pre-market. What just dropped?
Uh-oh. That's
News wise.
that's a little rough. Yeah, AMD. I mean, this name is not doing so good, man. I got rid of it in my long term. I haven't traded it in a long time. And it's trying to hang on towards this moving average and into these lows, but I just don't really love AMD anymore. Not to say you can't get a bounce out of this range, though. Opening higher lows, open market open. are getting going.
Oh my God, this is crazy action. This is what I love. I'm found guys like it's still my number one position, but like this is I like to see it's getting de-risked a bit.
Yeah, I mean, I think it's healthy. Um, I know a lot of people might think the
Oh my
contrary,
God.
but that's healthy to see is like a little bit, especially it's not. I know intraday, like down as much as it is, it's gonna scare a lot of people and freak you out. But you got to remember where you came from. And I mean, when I look at this on a weekly chart, it's like, oh, this makes sense. We're actually just pulling back to right around, let's see, we're not even at the 50% retracement of the actual range we're in yet. So we're in this range from $63 to 125. 50% retracement is 94.41, right? So like again, time frame is so relative. On a lower time frame, you're looking at this going, oh God, this thing's getting wrecked. But when you bump it up and you realize where we're actually at and where we came from, nothing bad is happening here. We're coming right into a 50% retracement of the entire bullish range we've been in. That is healthy for this stock. So obviously, red can scare you, and that's one reason why I don't even have red on my chart. I change my candlestick colors. Don't let it scare you, right? Let the chart actually be telling you what's happening versus oh my gosh, I just see red. I'm scared, right? So I wouldn't be worried on Palantir at all unless you're getting aggressive selling under that $94, to be honest.
Also, like guys, like institutions have been driving the stock. Like they're the ones buying this. Like you think they're gonna stop at 100 when they're buying it at 120? No. So like I think there's I think we're fine, everyone. Like I really do think it's overblown a bit. And it's just you need to see it. I'm happy to see it. Let's just say that I'm like happy to see it not be so ridiculous. Like I was worried about it, it was not it was a bubble, but like I didn't want to hit 150. I'm glad it's getting gut checked a bit. I would love if it consolidated between 80 and $100 for the rest of the year. That's like that would be a perfect situation for me because I it needs to be range bound for a bit. It just does. Um, so yeah, I
Get you,
mean,
yeah. Let's see what tickers we got from the chat. Feel free if you're on StockTwits, if you're on YouTube, throw some tickers in the chat. We'll go over them while the market's opening here. But just taking a look at Nvidia coming in, it's a beautiful move into the open, and now we're just coming right back in, right where we started this morning. So really things just not getting going directionally. On the higher time frame I mentioned this morning, NQ is really just going sideways on this 4 hour. Sideways to slight downside, right? It's like we're slightly pulling back on this giant bullish trend. I can't make any heavy decisions when the 4 hour chart is simply going back and forth and just creating an unfavorable trading environment. So until I have more clarity, it's tough here,
guys,
but I'm
Unity's
more
up
bullish.
freaking 22%.
Oh,
I can't
buddy.
believe
Oh,
I
buddy.
I oh
Oh,
my
she's
God.
cooking.
I said it. I said that they're going to be an app loving competing product and they're that might gain some momentum, like even if it's a little market share. I think I said it after the AppLovin call. Uh, and that's what's occurring right now. Jeez. I'm a
Craziness.
little tilted that I didn't get to, I hate. I wish there was no pre-earn. Unless you're an international company, I find fine. You can have a pre-market earnings. If you're freaking Unity, you're domestic. Like what the hell? Just have it after the market.
I'll be honest though. I mean, obviously, yes, up 22%. You know what I mean? And it's like, well, I feel like I missed out. You know what I mean? But relative to where this can go, I mean, if this is strong to me on a higher time frame, I'm looking at like a daily and a weekly. I see this going to these weekly highs, 28.71, and I mean, if we get above that, shy, we got some big spots above that, and I mean, $30 if we're strong aggression over that, this could get really bullish. Um, we'll see. I definitely like the way she looks right now. Somebody said AMD going back to 96. Yeah. Where is it right now again? 115.47. I mean, AM Dizzle, she's trying to. It's just, I don't, what do you see that, you know what I mean? Like, I got to ask myself, it's like, what do you see that's be affiliated here, and it's just I see nothing. We got a big spot from 103 to 115 that we're trying to hold, but we're really not seeing any momentum out of that area. It's just I don't know. I think it's tough for AMD, so I don't necessarily D6. We got to get through $100 first, though. ASXC. Let's take a look. ASXC. Short volume. Yeah, I don't even know what that chart is, brother. Short sale volume. That's just representing short sale volume, so not even a ticker. NQ.
There are some crazy moves right now happening, like in growth. Sorry, I'm just like monitoring this stuff right now. I'm seeing Axon Tech. I just added to Axon Technologies down 8% today. One, it's a new age of defense. I got into real detail what occurred yesterday, but it's not thesis breaking, so I added. I've been waiting to add this one even more. Um, I'm seeing CrowdStrike's down 3%, Palantir is still down 6%, Tempest is down 8%. Like, there's movement, guys. This is music to my ears when you have a 12% cash position.
Oh yeah. Ooh. Nice moves. Nice moves. Yeah, Tempest. Gosh. Let me take a look at that. Yeah, trying to recover that $80. I mean, this pullback is not. You see no fear in this pullback, in my opinion. Zero fear. So, and you're just pullback. It's just a pullback to previous all-time highs. Or I don't. This is all-time highs, correct? Yeah. Yeah, it is. I mean, I don't know how you could be heavy short on Tempest right now at all when you're just riding this impulsive momentum to the upside and you're getting a back test to previous all-time highs with no real aggression to the downside or fear. I just don't I don't see a bear case, that's for sure. I definitely think this gets another leg higher. It's just a matter of time, right? A matter of when. And if we're sitting pulling back to $80, kind of sweeping those internal lows, trying to go higher now. The highs are $91, $90. I mean, where's this going, right? In my opinion, $100, this psychological level. Stock's at 90, especially with institutional flow and big dogs in it. I mean, they want this at $100, so that's where I would anticipate we go next on any leg up higher. But Walmart, we'll take a look at Walmart.
All right, so Walmart, guys. This is. I should have presented this a bit more last time, but tariffs are real. This is a real thing. You saw with Global E 2 days ago, like their weak guide was purely tariff based. You saw it across the board with big tech like FX headwind, American dollar. A lot of the Q1 guidance, the weakness from big tech, tariff related in anticipation. Walmart's really exposed to tariffs. So I think that's you're seeing the implications of that. And this is a name that was expensive. It ran up. It wasn't. It's not growing a bonkers amount to justify the current valuation. So like when there's any kind of weakness in the guide, it's gonna. That's exactly what we saw.
Yeah, and now, gosh, Amp's gonna hate us from the spaces, but talking all bad about Walmart. He loves this ticker, but it had to come in at some point. And again, like you got to look at where we came from, and it's like, okay, go, get off your 5-minute chart, go to a weekly chart for a second, and it's like, okay, where are we actually at? We're pulling back from the actual highs. We're down, 7.5% almost. Okay, it's not that bad, especially on an individual name, right? If that was 7% on the indices, then it's a little different, but it's on an individual name with Walmart. And guess what? Previous highs are sitting at $96, right? So, I mean, essentially, you pull back to that, everything's fine. Of this range, the 50% retracement is 97.10. So we're coming right into that. I mean, if you hold that, that's even more bullish that you don't even need to go back test previous all-time highs. But I would expect that, at least a little bit of a wick down there or like an intraday sell-off just to that area. I would expect. And if you can't hold those previous highs, then I think we're going to where? Range lows, right? Where we start this, where I ran the Fibonacci for the 50% retracement, that's off of the 88.93 lows. So if we can't respect previous highs here, I mean, it's simple. I think we're going to go to where we came from before that, and it's just range lows. So Keep it simple on there. If we're holding 50% retracement, previous highs, Walmart's totally fine. If you're losing that, expect the range lows, and you know, if you get under that, obviously then trend's starting to flip and you start to play it the other way. But I don't anticipate that for Walmart. I think a 50% retracement, previous high bounce will end up happening, but we'll see. Keep eyes on it. Oh, NQ. We're getting movement this morning. Oh boy. We just swept some internal lows from this morning that we made in pre-market. Again, I'm pretty bullish on NQ at the moment. We're respecting higher time frame imbalances. I really have no reason to think we go lower at the moment unless we need to rebalance to this daily area I have that starts at 22,050, which we totally can, but based on the way we're looking right now and the areas we're respecting, I don't anticipate that happening. We're looking good for more upside, at least until, I really want to see back to these 4-hour range highs, but if I'm going to take low-hanging fruit and be safe, I'm looking more around that 270 range. But ideally, if this is really bullish from this consolidation that we're on the higher time frame, I want to see 320 on NQ, which is the highs. So, and then into all-time highs. But it's got to take it level by level here. Hims, yeah, we'll take a look at Hims. We talked about it a little bit. It's rip and chart, man. And it's definitely not something I want to fade. But at the same time, for long term, not something I'm investing in. But I think the short term momentum has been great. There's definitely been some plays there, and if you've made some money, great. I don't see a reason to really be exiting all of a position if I had one. But I definitely would be taking some profits at these areas. Just what I think personally. But you got nothing bad showing up on the chart yet, so. Depending on your time frame, depending on what you actually want out of the stock and your price targets, I think this looks fine. I have no reason to sell. So that's my thoughts there. Shay, you got any more thoughts on Hims, or I know
No, yeah, you guys
touched on
heard it. I've been wrong on it, so I still
Let her
I
cook.
still mine's long term thesis, but I'm just looking right now. God, Palantir is not getting bought up. I thought it's a 20% move in like less than one day. It's less than one day, but the indices are holding up well. So that's like I don't know where the repositionings occur because growth's selling off right now, big time. So if that's the case, where is it going towards right now? Because Alibaba, it's going towards China. China's a hot place to be right now.
Red China. Dude, yeah, Alibaba is just ridiculous. It's so scary, though. It's so tough for me to swing a China name just because I know what can happen. Just look at the Alibaba chart and look at the amount of gaps that just happen over and over. It's just scary, man. But God, if you're right, you're getting all those gaps in your favor. Look at what it's done from those lows. From those range lows, it's about 75% move to where we're at right now on the daily chart. It's just ridiculous, man. Wow. So stoked if you're in Baba. And again, similar to Hims here, I don't have massive reason to be like, oh, I'm getting out of my position here. Obviously, you bump up the time frame monthly, weekly, you're definitely coming into some big areas, but I don't have a single worry about Baba here except for the fact, you might wake up and gap down 10% and you didn't even realize it. And that those kind of surprises can definitely come on names like this, but again, opportunity is opportunity, right? And if you're willing to take a little bit of the risk, China's been ripping, so doing good. When do you think AVXL will return to $20? Not a name I know, so I don't know if I think it'll return to $20, to be honest. And based on the chart, I'm definitely not thinking that way at the moment. Let's see. The daily, we ran up to, what is this, 1441 recently, kind of recently, in December. Couldn't get over that, and we've kind of completely flipped the trend from those highs down into these range lows. So, if we want to get down to $7.20, maybe sweep those lows from November 18th, and then hold and try and go higher. Maybe we can get some, more of a buy model happening here. But as of now, I think it's going to head towards those 720 lows, and then it's all based on what happens there. And if we want to get displacement below that, I think we go to even lower range lows, which is like $5. I don't really have a big bullish thesis for this name at the moment. It doesn't look very good to me, personally. Have you ever seen that name, Shy?
Never. I'm a life. I do have small cap biotech exposure, but yeah, I have not seen that name before. But yeah, Tempest AI is down 11%. It is
Whoa.
interesting. They are reporting on Monday. Profit taking, maybe, but everything. Q is just Inspire just had pretty ugly candle as well. Yeah, it's just jittery. People are feeling jittery. There's no real reason to like. I've been saying this. Like, I don't know what the next catalyst is except for Nvidia, but like, what's the next catalyst for this market to hit the next leg? Like, it's up 5% in 6 weeks this year on poor te- poor earnings. Like, this was not a good earnings season. It just wasn't. We still have the high stakes poker game that's happening, geopolitical risk, like just after a 2 year run up, I really think this year is just going to be range bound. It's hard for, like the rest of the year. Like I think Q, I was underwriting mid to high single digit return for the indices for the full year. We got that in 6 weeks almost already. So like there might be profit taking. It's going to be choppy. Um, what's the 10-year yield doing? Let's see that. 10-year yield is it's low. It's red.
Oh, is it?
Barely, but it's at 4.5% exactly. So I don't know. Was there any data today like a release that caused a recession? Maybe Walmart is causing some jitter on like because Walmart
I mean, that can make
is
sense because
America. It's American consumers, guys. Like
yeah,
that's Walmart.
yeah,
So
exactly.
like,
I wouldn't be surprised if that's where a little fear did come from because you definitely start to see that.
but this is awesome. Like I'm, I know you guys like this might be like scary for a lot of people, but like you guys see my pearly whites, like I'm like smiling right now. Like this is you kind of this is why it's really important to not be overexposed. Don't overtrade. Like Jordan, he hasn't overtraded. Like he's not seeing anything in front of him. He's being patient, and now he's just like not sweating right now when things are breaking a bit. Like it's
Yeah,
been feeling toppy recently. And Palantir, the tell was Palantir like back to back days. That was a really ugly daily red candles. Like they rug pulled any 5% move quickly. Like those were toppy signs. Um, and you're seeing just I don't know Amazon showing a ton of weakness as well. Uh, wow, Palantir is continuing, but yeah. So I don't know. What do you think about this current environment right now, Jordan?
I think it's very much if you're kind of swing trading, you got to be quicker with your swing trades, right? Like, I've said it's more of a day trader's market, but that doesn't mean you can't swing trade. Like, I don't think it's impossible to swing trade in this environment, right? But I do think it's like you really got to be picking the right names, the right setups, and be a lot quicker with those trades. I mean, I remember sitting in swing trades on Tesla for, I mean, months last year, and I can't do that right now. Not even on Tesla, I'm willing to do that right now, even though it's looking decent at the moment. But like, I'm not even willing to really do that on Tesla. Any positions I take on Tesla, they're all going to be quicker trades, no matter what I'm trading right now, just based on the environment. So I definitely think it's a little bit more whipsawy, but I like it, to be honest. It's just you really got to be picking your spots, and when we're markets back at all-time highs like this, we love to see it for our long terms, but also, it creates a day like yesterday where we're just chopping on this 4-hour time frame, back and forth, not really making any massive decisions. Now, of course, if you're scalping back and forth, there's opportunity within that, but that's not really the style I'm trading, right? I'm looking for massive moves in the market, and when you're just accumulating on a high time frame like that, there's no real clarity for direction, right? Which makes it tough, and that's where definitely trading a lot less, but I don't mind that, right? A lot of people think if you're not trading, then it's a negative thing where it's just It's simply not. I actually really like the aspect of trading a lot less, waiting for those high time frame, A plus setups, and just being able to kind of go through the trade a lot more chill, rather than like scalping back and forth and sweating through it. You know what I mean? Palms are sweaty because you're throwing, a bag in to try and make like a quick scalp. It's just, I don't know. I don't have much conviction trading like that. So waiting for these, sitting back, waiting for those higher probable moves, I think is doing me a lot better. And I think it would be doing everybody a lot better throughout this whole year. Because Shy, like you've explained, I mean, big tech is quiet. Look at the market. It's been a lot quieter and more whipsaw this whole year. I mean, you have to be able to adapt, you know what I mean? So that's just what I'm trying to do, adapt to the market, take less trades because business is boring, man. And we all over glorify trading. Trading's great. Don't get me wrong, I love it, and I'll always be a trader. But we all shine too much light on it. It's like, no, this is just business. It's supposed to be boring, right? And that's why I have no problem sitting out and not taking trades for a day. Whereas, the average trader, I gotta wake up and make money. I gotta make a trade. I gotta do it, right? They're all just amped up every single day. Where making money is not even in my thought process. I'm showing up. Let me play my plan. The money will fall in my lap, in turn of me doing that, right? It's a byproduct of my actions. So that's really what I'm trying to focus on this year. Is just improving more and more as a trader. The money will come. Let's not even think about the money and just play our plan and try and capitalize as much as we can on this market, because we know with Trump's speaking all the time and this administration, there's going to be tons of opportunity and we want to take advantage of it. So if we can adapt with the market environment and the way it's changing, I mean, and capitalize on it, that's what we want to do, right? So
Hmm.
trying our best, sit back and not get screwed on the half-ass C plus, B minus setups. It's just not worth it, especially in this environment. Ooh.
Yeah, it's brutal. This is a bloodier day under the hood, for sure. Like QQQ is only down 0.6%, SPY 0.4%, but the number of stocks that are down 5+% that are like growth stocks are wild. Palantir is about to be. I think Palantir is going to retest $100 today.
Oof.
I'm watching that level. It is crazy times right now a bit.
Yeah, we're now disrespecting some higher time frame areas. So um, my bullish bias is starting to slowly flip here. Depends on what we do at these lows.
Oh,
It's not even 7 o'clock yet or 10 o'clock Eastern. So we generally will see a lot of manipulation and kind of fuckery happen around that area. So I'm definitely kind of waiting until 10 o'clock to make any real decisions. Let's talk about cost yet. Costco, no, not a name I really am big in. Although I do think it's a great long term holder. Getting kind of wrecked this morning, but again, where are we at really on the high time frame? Right, intraday this looks scary, but where are we actually at? And we're at nowhere to worry. When I look at a weekly chart of this entire giant bullish range we've been in, we're pulling back. What is this? 4% from the highs. If you're worried about a 4% correction, I just don't. I wouldn't be worried about this. We could come all the way into these previous highs of $1,000.08 and or $1,008 and retest that. That would be fine. 50% retracement of this entire weekly range is 990. So I really wouldn't. That would make sense to me too. Just the way price action works and the way the markets move. I wouldn't be surprised that everybody and their mother thinks, oh, I'm going to buy at 1,000. Where market makers know better. They know you're probably putting your stops 10, $20 below $1,000 if you're buying there. So where's 50% retracement sitting? 990, right? It's perfect. So I would anticipate we trade kind of to 990, maybe even slightly below that. Stop all those people out that think, oh, $1,000 is the retest level, and then maybe go higher after that. But if not, I mean, we could fill imbalances and go right back to the lows at 900. So kind of just watching this range, if we can get some strong aggression off of that 50% retracement, it's back to highs for me. And if we're rugging through that, it's back to the range lows at 903. You got any thoughts on Costco, Shy?
it's overvalued, guys. I'm sorry. I'm sorry, but like when you're that massive moats, I'm not discounting them up. But like it's a mature company. It's overvalued. Earnings is just It's way up there historically. So we've got is that 62 times earnings, guys? That's
Yeah.
wild for a name like Costco. Like wild. I don't think it's gonna go down 30-40%, but like I don't think it's gonna go up. This is typical range bound candidates. Massive psych level at 1,000. It's gonna be hovering over around there for a long time, in my opinion. Like not just months, like maybe a year or two. So like, um, I do think that that's like one of those things where I just want to touch. It's a great. It might be a defense stock because I don't think it'll go lower. I'm seeing a question on chat. Can I elaborate more on earnings not being good when 70% of the stocks report earnings beats? I can't remember where I saw that data. Okay, so that's backwards looking, guys. When I'm referencing earnings weren't that great, the market is a forward-looking mechanism. The guides were at best at par. Most of them were guided a little lower, and that is what I mean. Like they weren't good. Like they are either sandbagging due to the high stakes poker game that Trump's playing, strong dollars really affecting them that they think tariffs are gonna also make it worse. That's not. There's just so many headwinds associated with their guides that like that's why I meant that it wasn't good. Like last quarter of 2024, great results. That's exactly what they produced. But 2024 expectations so far have been very mid, like at best. And I think for tech investors, which is what I am, growth tech, the AI workloads showing weakness from Azure, AWS, and Google Cloud, like that is worrisome to me. It really is. Um, I don't know if it's because they produce so much money and it's such a large scale business now that maybe it's grown so much that won't really it just won't affect the mid cap growth players or software players. But uh, there is somewhat of caution among business spending that's occurring right now from what I read from the big tech earnings. So that's causing me to like, oof, are people like holding back a bit because Trump's first 100 days, there's going to be some ri- not ridiculous, but really impactful moves that they don't really want to front run. They want to wait to get more information, then make business decisions on. That's what I'm trying to get a sense of. I think that's what's going to be. But end of the day, like that's essentially putting everything on pause. And I just Palantir is under 100. That is wild. But yeah, so that's my 2 cents on what I was just talking about.
Yeah, it makes sense. Well, crew, I hope everybody has a great trading day. I think we're gonna wrap it up now, but
Whoa, it's down 13% now.
wait, what? Palantir?
Yeah.
Oh, oh. Wait, where's that 50% retracement I had? I mark them on so many tickers. I don't even remember if I did it on. Yeah, I did. Okay, 94.41 shy. Watch that
I'm
spot.
looking
We'll
out for
see.
that.
We'll see if you get any hold up there, but obviously you got those previous highs again as well at 84.80, right? $85. So, and generally with 50% retracements, as most of you probably know if you've been trading with them for a while, like it's not going to be a perfect bounce off of it generally. You'll usually like trade through it and then end up reclaiming it. So just keep that in mind as well. But we'll see if we get any hold up there. Again, I wouldn't really worry though unless you're getting real fear below that area. But yeah, crew. Appreciate everybody. I hope everybody trades safe on the Thursday. We got FAFL Friday tomorrow, and we will be back on, or myself will, I think with Michael Nouse as well. But we'll have to see Shy next week. So Shy, appreciate you, brother. Appreciate the whole audience. We will see you guys bright and early in the morning, and make sure you guys are liking and subscribing on the StockTwits channel. And yeah, we'll see you guys in the morning. Enjoy the day.